Hello, traders. FX Pip Collector here. Today is Tuesday, May 13th, and this is my analysis for the Kiwi US dollar. If you haven't done so already, definitely do check out my free Discord channel, which is linked over here in the corner at the end of the video. And make sure to take a look at my website, fxpipcollector.com. Watch the video on the home screen to learn more. So anyways, on the Kiwi dollar, well, first of all, we have CPI inflation data coming out today for the US in a few hours. Definitely a big news event and definitely should cause some volatility on basically all the dollar pairs and really pretty much all the pairs anyways. Now, we have to, like I always say, we have to come to the conclusion that the higher time frames are definitely still in an uptrend, which means that this may just be a pullback within a uptrend. Now, we haven't bounced from the 38% yet, but we did, if you look, we bounced from the 138, which is the Fibonacci extension of this projected off of here. Now, with today's news, if it goes up and breaks structure, then that definitely would tell me to continue to look for longs, maybe even hold on to longs that we may already be in. Now, if it doesn't go up and break structure, but instead it ends up making like a lower high, and impulse it down, then you probably should continue to look for shorts, maybe taking it down to the 38 or the 50%. A lot of the US dollar pairs look like this is a wave one and this is a wave two, and that potentially the wave two is not over, meaning that it would go down to a much lower Fibonacci level before it actually continued the uptrend. So I have to keep an eye on it. I am actually leaning towards that the trend is up and that this could just go up and break structure and continue the uptrend. But I definitely agree that most of these pullbacks seem way too small to be a complete wave two. So anyways, don't forget to like and subscribe. And as always, thank you for watching and happy trading.